Hi traders and welcome to the technical analysis wrap on Friday the 13th of August. So we've seen some pretty reasonable consolidation this week on most of the majors. The zones have been big enough though to get trades in, but we're definitely trapped within a range at the moment. So we'll jump straight into the markets and have a look what we can find for today and for early into next week. We'll start out here with the Aussie USD, and you can see the trap here that we've laid for it. Really, the 73.30 and the 74.20 is effectively where price has been hanging out, since early July. And you can see that the 20 moving average is bearing down on it now and pushing price down lower and lower. So although the range is at the top end or around that sort of 74.20 area, the 20 is starting to bear down and push price down a little bit more now, and the 73.30 is starting to feel a little bit more pressure. So look, with this one, you want to be waiting for the break before you do anything else. Like, the long-term plan for it is definitely the 70 cents if it does break lower, and there's a very strong case for it. I mean, if you go to, I'll just take it right out and let's go out to a weekly. You nearly have to go out to a weekly to actually see where the real problems are for this. Now you can see here the weekly shows the 73 where it's at currently. If you want to look at the next level, which is the 70 cent mark, that's where it's going to be really strong. That's the next level right there, and you can see how strong this level is. You can see we've got a lot of support through that area there. Resistance, more resistance here, support again there. So it's a logical target for it if it does break through. Now we need it to break this level. We wouldn't want to be preempting this trade at all, but if it does break it, that's the logical place that it's going to go. So a longer term target, sure, but we've got to be very, very mindful that it's still got a little bit of work to do. We want to see a daily close. Nothing short of a daily close below the 73.30 would really get me keen on going short, mainly because it's been able to hold up ever since. And you can see the wick rejections are pretty strong through here, and this level has held up very strong. I am mindful that the 20 is bearing down on it and pushing price down lower and lower. So yeah, the impulse moves from the buyers are actually getting less each time, but that could change, of course, if we get a close above the 20. So it's really just one to watch. If you want to be trading it, you need to be going down to the 1 hour time frame and just trade these zones. And of course, it's a pretty reasonable zone on the way up too. So if it does get a cross to the way up and gets above the moving averages, like, you've got 40 or 50 pips of pretty easy scalping on the way up as well. The preferred move is down though. I think ideally we want to see this break down this level. We want to see it break. And this is why you don't take a 4 hour break, because it's just not quite. You can see here we had breaks on the 4 hour and it didn't really go anywhere. And that's because the level's just too strong. You can see the channel, the mini channel inside here is formed pretty strongly, and you can see it a lot clearer on the 4 hour. But we want a daily break, okay? So this level has to get a daily candle break. We get that, and then we start looking for the shorting opportunities. If you miss the first initial break, just wait for it to come back. It'll generally come back and test it from the bottom, and then you should be good to go again and start shorting it off the 20 moving average. But good trading on the Aussie, I think. We've got good ranges, and I think we're waiting for that all-important break to give us a good move down. Failing that, of course, if it breaks above the 20, then we start to look for long, but it has to do that first, and we certainly wouldn't be preempting it. All right, we'll move over to the US dollar CAD. US dollar CAD's trapped in a little bit of a zone as well. It's found itself in a double zone. So you've got the ranges here of 126.20 and 124.20. So you've got a pretty big 200 pip range, but at the moment it's stuck right in the middle of both, and it's found itself in the middle of a little mini channel. So if you go down to a 1 hour, you can see that it's formed a little bit of a mini channel inside the bigger one. And I wouldn't be keen on going on either of these journeys until it actually breaks out of this channel. Sometimes when price gets a little bit sideways like this, it can stay here for a bit longer than you'd expect, and you can get chopped up in a pretty messy market. But if you get a close above this level here, so above the 125.35 area, or a close below the 124.90 area on the 1 hour, then you can start heading for those bigger channels. So you can start heading for the zones down here, which is the 124.20 or the 126.20. So either are fine, but it does need to break out of this little mini zone. If you want to trade that little mini zone, you've got to go to a very small time frame. And look, there are probably a couple of opportunities that you can probably find, but you can see even a 15-minute is fairly messy. Like, yes, it is moving up and gradually going up slower, but pretty hard to trade, I would have thought. I think there are better trades than that, so I wouldn't be jumping on board anytime soon until it gets out of this zone. Once it gets out of that zone, it could be happy days for the CAD, and I think it's pretty easy sailing for both moves up and down. I think regardless of where it goes, I think we've got a pretty easy run. So that's not too bad trading on the CAD, but just wait for it to break out of this little mini zone. Okay, we'll go over to the US dollar yen now. So the US dollar yen has had a bit of a resurgence off that base down here. It broke right through, and now it's testing that upper resistance. So you can see here I'll put a horizontal line to mark the levels that we're talking about. You can see that it was pulled up here at this level, around there as well, right through here as well, and we've had a bit of a rejection here on the daily, and I'll blow it up so you can see it a little bit clearer. You can see that it did attempt to get up there, like it reached as high as 110.80 on that candle, but pulls right back down to the 110.50. 110.50 is a strong level for this. There's no question about that. For me, it's still a little bit difficult to really work out what this one wants to do. I think you have to go to the smaller time frames and scalp on this one. I'm not convinced it's going to go on a big run just yet. It needs to break out of these key zones, because really for this to go on a big run, it has to get above the 111.50 and sort of really push on. If it does that, then it's going to open up to 114, 115. But it's got a bit of work to do. What I liked about this one, though, was it did have this engulfing candle right down the bottom here, exactly where you would have wanted it, and it really did push on and show good strength. It's been really strong here for about 6 or 7 days now. That was the first week candle, and that was exactly where you would expect it. So if you did go long on that bullish engulfing, then the level you would have been taking profit would have been at the 110.50 anyway. So that's that little 30 pip move up was probably a bit of a bonus. This is where I would have taken profit. And now it's probably waiting for a bit of a pullback to the 20 moving average. So you can go to the smaller time frames and look for a change of trend off that level. You can see that it's pushed up there and it's flattened out a little bit now. But if we get a sequence of lightning bolts, like a lower high and a lower low off this level, so if we get a close down here, you can pretty much trade it down to the 20 moving average, which is not a lot of pips. I mean, you're only talking about 30 or 40 pips, but still it's a scalp. Like at the moment, I think scalping any of these majors is pretty good trading, and you're getting good moves because they're in good ranges. So they're certainly worth a shot. But again, I wouldn't be picking a big direction and going for the long trade, because I think there's still a little bit of work to do for all of them to break out of these zones. But this has been pretty good. The change up here would be down to the 20 moving average. I'd be pretty happy with that. If the 20 fails to hold, the next level will be around that 109.80 again. That's the next level of support. So if it gets down there, I'd be starting to look for long opportunities again in the reversal of trend. Of course, failing that, if the daily gets up here and breaks past this level and closes above, and what I want to see now is probably a close, definitely above this candle here. It doesn't necessarily have to close above the 110.80 candle. I mean, anywhere in that range would be good. That would be a good positive sign for it. But it does have to close above there on a daily chart. I wouldn't be taking any other time frame except the daily for this particular trade, because it does need to prove itself at this level. And if it does that, then it really opens itself up to the 111.50, which is about 70 or 80 pips away from the break. So again, even though it looks like it's a lot, it's still actually really only scalping. So keep your trades nice and short on these majors at the moment, because they're not giving us a hell of a lot. We'll go to the dollar index now, and the dollar index did exactly what we wanted it to do, which was good. It bounced off this level, found support at the level that it needed to, and definitely went up straight to the resistance. So the 193 is the level that we expected it to go to, and there it is. Of course, the euro is a trade on this one. We'll go to that in a second. But again, it's finding itself at that position where it's going to have a little bit of trouble getting past this zone. It's not going to be here forever. Look, resistance and support doesn't last forever, right? So we have to be very, very mindful of that. But all we can do is just look at the shorter term moves, and we do know that it pulled it up here. And we would fully expect at the very least it's going to find trouble here. Okay, so, and we know that it has done that. What I would want this to do now for dollar strength to really kick in is probably pull back a little bit further down to the 20 moving average. That would be ideal. And then launch off the 20 moving average and go for one big push and then get past that level. Because once it gets past this level, it really opens itself up to a big move up. So we want to see it pull back down to the 20. That would be ideal. And then a big resurgence straight up and push through this level and then start to head up. We'll go to the euro, which is the one we would be trading in this instance anyway. And no difference here. You can see this is a very strong level of support, of course. So no different to what we saw on the dollar index. Same deal though. What we want to see is a pullback up to the 20 moving average. So if it pulls back up here on the daily, down up to the 20 moving average, which is bearing down on it, sell off from there, and then one big push down and get past this 117 area. And if it does that, it really opens itself up to a big move down. If you take it out a couple of notches, you can see how important this level is. And it really opens itself down to, like in the first instance, it would get down to probably that low 116, so 116.20 area, so about 80 pips as a scalp in the first go. But if that level doesn't hold, and I don't know if it will this time, I think the price is bearing down pretty solidly, and the dollar index is looking strong. So if it does get down past this level, it may find a little bit of support here. but if it breaks that support, and we'll probably trade for that, we'd trade for the support here first. If it breaks past that level, you know, the 114 is really where it wants to go. So you can see the 114 level is where these peaks are here. Okay, and that is more than likely the level it'll go once it breaks past these troughs here. So keep an eye out, set your alerts. Of course, if you're going to trade it long, what you're going to be doing is looking for a change of trend on a smaller time frame off this level. So you have to go down to a 4 hour or 1 hour. You're going to look for a change of trend, a series of higher highs and higher lows. I wouldn't be listening to anything probably lower than a 1 hour time frame on this one. 1 hour change of trend would be ideal. If it gets that, then you know you've got a bit of momentum on your side, and it can certainly get itself back up to around that 119 area. So not bad scalping, but I think you want to keep your trades pretty short on the euro as well, because realistically it's got a bit of work to do. But I think it's at a fantastic level. I really like this level because it gives us two good opportunities. One, if it breaks down, we know we've got a really good short on our hands and probably many opportunities to scalp it. But if it does reverse from here and double bottoms or finds a little bit of support and a lightning bolt on the 1 hour, then I think it can get itself up to that 119 pretty quickly as well. And that's a couple of hundred pips. So the ranges aren't too bad. So really that is in line with the peaks through here. Okay, and you can see all of that resistance was going to hold it up there as well. So not a bad range to be able to trade with. So the euro is not a bad trade at the moment. All right, the last one we will go to is, we'll have a look at gold actually. The last one is gold because it's done, well, effectively it did that big move that we saw early this week. This is on the daily. It came down and touched that level. It's amazing how it actually really respects the levels when they, when it doesn't know what it wants to do, it bounces straight off those levels that you'd expect it's going to find support, which is right here, the 1680. They really do hold up. Levels really hold up on gold, even though, that was a ridiculous sell-off. Like, that was a massive fall. But again, it finds support exactly where it found support previously, right on the 1680. It had a massive rebound. Of course, it rebounded, the best part of $40 very, very quickly. And it's starting to try and push itself up. It is at a point now where it's do or die time for it, though. You can see here, right where it's at now is a point of roll reversal, and a very important roll reversal at that, which is at 1750. Historically been a very, very strong level. You can see it was support here, resistance right through here. So it's going to take a little bit of breaking. If it does break through this point here and starts pushing up, 1780 to 1800 is going to be your target. Probably the 20 moving average is probably that'll be the 1780 by the time it gets there. It's not going to, because that 20 moving average is about to move down another notch. So that would be your first target, the $30 up from the 1750 up to the 1780. Not a bad target. But if it does reverse from here, and this is a 50% fib too. So if you measure this move from up there to down there, that'll be 50% of that move. So it's a 50% fib straight up. You don't even have to draw it to know that. So it's an important fib line as well at a roll reversal. So just don't be too overconfident that it's going to go long from here. It needs to actually do it. Don't just preempt it. It really needs to actually close up here and start to track up. Then there's a $30 movement, which is pretty comfortable. But again, it must do it first. Don't preempt it. The chances are that it could easily reverse from here and actually push back down and get back down to the lows of 1690, and it could do that quite easily. In order to do that, you're going to be looking for a change of trend on a 1 hour or a 4 hour, see a series of lower highs and lower lows, the lightning bolt that we're always talking about, of course. And if you get that at this level here, then the obvious target is back down to these lows here at the 1690. And if it does reverse here on a 4 hour, if you get a 4 hour change of trend here and it starts to track down, this is more than likely where it's going to go, with a pretty pretty nice stop loss, really, not overly high from where you're actually entering. So it's a pretty good risk reward trade. So we've been pretty good. I think we've been pretty blessed over the last few weeks to have good ranges that have been big enough to give us opportunities to actually scalp. So that's usually important when you're trying to get some decent pips out of the market. I think the levels are looking at breaking. They do want to break soon. I think it's just that the trends are going to start, but we're not going to trade until we get the breaks. We're going to only scalp, of course, scalp these zones, and then as soon as it starts to break out, we'll start to take advantage of the big moves again. So happy trading, everyone. I hope you have a great weekend. Hope you had a good week's trading this week, and I look forward to seeing you all next week.